morning, late morning, everyone. I'm sure you're overwhelmed with information already. There's been a lot said. I keep saying that I'm really glad I got to do the first talk yesterday. People thought I was really, had all these good ideas. Actually, it was just that you hadn't heard them already from 5 other speakers, which you probably now have. So if I gave the same talk now, you would be like, yeah, everybody's already said that. That's not novel. So instead, I thought I would go through the companies that I own in my Maven portfolio, the portfolio in my newsletter, who are here at the show. And the concept here is obviously each of these companies is coming up and giving their own 10-minute presentation. But if you can't give an elevator pitch on an investment, an elevator pitch is a really good test of whether you have captured those key things about each company that you really like. So my challenge for myself is, can I go through, I actually own, if you can believe it, 13 of the companies that are here, so like almost half. And I only have I have like 19 minutes. So can I capture what I like about each company in about a minute? So there's gonna be more information on each slide than I'll even have time to say. The slides will be available on my website, so if you want to look at them, then you can certainly do that. But like I say, my point here is to try and distill down each of the companies that I like into sort of those 3 to 5 points that are the take-home message for what the story is to me. So I've divided them into sort of explorers, advanced explorers, and then there's some other plays. There's royalty and uranium, so that's the order, and then they're just in alphabetical within each category. So I'm not trying to play favorites. This is just, they had to come in an order. So Allegiant, starting with A. New company, spun out of Columbus Gold. The thing here is this portfolio of assets, of projects, mostly in Nevada, developed by Andy Wallace and his team at Cordex. So Cordex has not just found a bunch of ounces in Nevada, but they have found economic ounces that have been put into production repeatedly in Nevada, in the millions. These guys know how to find that kind of gold. Over the last 10 years, when there hasn't been a lot of money for exploration, they've been picking up projects, advancing them slowly, and putting them in this portfolio that until now has not had any focused attention or money. The spin-out of Allegiant is precisely to do that, is to put focused time and money into this portfolio of assets that's handpicked by this proven team. There's no guarantees this is exploration. There's 2 assets that are more advanced. The rest of them are very early stage. But the point is this will be a very busy team that's going to drill test like 10 or 12 projects in the next year. So there'll be a lot of news flow. Some of the projects will turn up nothing. That's what exploration does. Some of them could well run into something because of the people who picked these projects and have been slowly looking at them and getting them ready for drilling over the last 10 years. Oren. So the 2 things that I say about Oren is that first, it's a portfolio of junior explorers in one company because they've got a lot of different projects, but it all comes in just Oren. Secondly, not only is it a portfolio of companies in one, it is led by a team that has capital markets abilities, deal-making abilities that are unique in the industry. Maybe unique's a bit of a strong word, but these guys know how to find money, they know how to make deals. They have a big picture perspective when it comes to targets and deals that is unusual. So don't discount this team. This team has pulled rabbits out of the hat many times, and they're almost that's sort of what they're known for. This is a really interesting portfolio of projects, and I can suggest that there's some pretty interesting things that are coming down the pipe for Oren. So big thinkers, lots of projects, lots of opportunity. EMX royalty. I guess they should have been in the royalty category. So strong technical team, finds projects around the world, finds other companies to advance those projects, retains payments and a royalty. Has been doing it for long enough that this year they will actually make money, cash flow positive, net of what they're spending on all the rest of their exploration. So that is very unique, right? This is an exploration company that makes money, ? So clearly that really protects the share structure, very important for shareholders. They've done that by also making strategic investments along the way, buying some royalties, buying some really interesting stakes in some projects. and a team that really knows how to make deals. So again, I would suggest there's probably some very interesting deals that are coming down the pipe from Eurasian. I keep calling them Eurasian. They used to be called Eurasian, EMX. I'm not good at that. Not good at the new name yet. But they're going to make money this year, and they have a huge range of exposure to really interesting projects around the world, strong technical team, and a lot of interesting strategic investments that could turn into who knows what in the coming months. Great Bear. This is the project that has that high-grade Dixie Lake, or the company that has that high-grade Dixie Lake project in Red Lake. What I like about Dixie Lake is the continuity of gold. So usually in Red Lake, you drill. You like hit, miss, hit, miss. The hits are phenomenal. The misses are misses. At Dixie Lake, over that 500-meter strike of the zone that's been looked at mostly, of the 73 holes that have been drilled, 70 of them returned at least one intersection of at least 3 grams. A bunch of them returned multiple intersections. So the consistency of gold is standout for the jurisdiction. Then there's the fact that now they're looking beneath that, just around the hinges where geology does this in Red Lake can often have really good opportunity. They're looking on the other side of the hinge, and they're looking 2 kilometers up strike from the zone. If any of those pan out, the scale of potential mineralization here gets big quickly. And this is in a company that has a really tight share structure and that the market doesn't really know about yet. So I think there's good opportunity there. GT Gold made 2 legitimate, significant discoveries last year. That's unusual in itself. The share price has come off a lot, so the entry point is still reasonable, is still good. One of them, high-grade veins, good continuity so far. Suggestions from some step-outs at the end of the program that this thing could get quite a bit bigger. Clearly, with only 1 season of drilling, we don't know the limits yet. So the vein system is already really interesting and shows good continuity. Then there's the elephant in the room, which is the porphyry. It's right beside. It would have been what created the vein mineralization. It would have been the driver. Just down the road is the Red Chris mine. The Red Chris mine taps into a really, really good porphyry deposit. If they can find a Red Chris at Saddle North, that is worth a lot of money. That sentence started with an if for a good reason. They have like 3 holes into it and hardly know anything about it yet, but it could be there. The geophysics makes sense. The initial drilling is prospective. So a lot of potential, de-risked to some extent because the discoveries have already been made and it's right beside a road. So that's the summary of GT. Nevada Exploration. So this is the groundwater company, right? These are the guys who looked at Nevada and said, wow, we have found a lot of gold in Nevada, but it's only ever come from where the bedrock sticks up out of the gravel. It's really hard to see through gravel in Nevada, but the same rocks are underneath there. How do we look through? So they have spent more than a decade figuring out, and it takes that long to come up with rigorous, repeatable, scientific, a novel, rigorous, repeatable scientific approach. So they've spent a decade figuring out how to use groundwater to vector in on where there might be some other big gold deposits that are just obscured by some gravel. The cool thing at this point is the most recent set of exploration results suggest that they have found a system at Kelly Creek that looks, in terms of alteration, groundwater signature, what they know about the rock type, and the structures, it looks just like a big gold deposit that's very close. This has been the whole goal. Bigger picture-wise, the goal at NGE is to find like really big gold deposits. So they're getting there. If it happens, people are going to think it's an overnight success, but it's actually an overnight success that's taken 12 years, and that 12 years has led them to a really interesting point right now. Terrax. I guess some of these haven't, I guess I'm sort of realizing several of these companies haven't presented yet, so I'm giving you a preview of what you will learn more about shortly. Quite obviously, a bunch of them are sitting right beside me now. Terrax has the Yellowknife City Gold project, which, as the name suggests, is right around the city of Yellowknife. So really great in terms of access and infrastructure. Area had 2 really good high-grade mines. Historically, those mines had closure problems that meant that explorers sort of ran away from the area, left it for years. Terrax saw opportunity there. Interesting, there's gold all over the place in this area. That's opportunity. It's also a challenge in terms of figuring out how to focus and where to look to find the locuses of that gold. Terrax has spent quite a few years already. They've done a good amount of drilling. Last summer, they stopped drilling, did a lot of regional work. It's the inexpensive, market thinks it's boring type of work that brings together the data and gives them a much more solid approach next. What I think is interesting with Terrax is that they are going to now do a winter drill program that will culminate in a resource estimate that I think the market will be very surprised at. After a summer of what the market thought was boring work, people think boring means that they're not doing anything, it's not very exciting, they clearly aren't finding anything. That's not the case. There's actually a lot of gold that they've already defined up there. So I think now with this big picture more solidified, go back, do one more drill program. I think the resource will surprise the market. I'm sure the company reps aren't ready to say that, but I'm ready to say that. East Main. East Main's main project is the Eau Claire, or Clearwater, project in Quebec. Clearwater has a long history with a previous management group. So the market has its opinions about the project based on that. At the end of the day, that management group produced a resource that didn't make any sense. It didn't divide it into open pit and underground. It was very discontinuous because there wasn't enough drilling. The assumptions that that resource was based on in terms of mining costs and recovery were unrealistic. It was a very badly put together resource. East Main has now put a huge amount of drilling into this deposit. They've come up with a new geologic model that differentiates 2 kinds of mineralization that are within there. That model makes a lot of sense. They have divided the resource into open pit and underground. They've used much more conservative cost assumptions, and that new resource, the grade increased by almost 50%. So this new resource is leaps and bounds ahead of what the old resource was. That was a really important step. The next step is to use that resource to wrap economics around this asset for the first time. So that's coming. Within that, they're also doing one more set of drilling to sort of amplify their understanding of the underground portion. When that PEA comes out, we're looking at the open pit portion of that resource is tapping into gold grading almost 6 grams. So 6 grams open pit on a road in Quebec. That's the PEA that's coming out from East Main next. They have other projects as well, but I only have a minute. Okay. Apparently there's things other than gold in my portfolio. Fireweed Zinc. Zinc, obviously I'm bullish on zinc. Zinc market is very strong. Fireweed has had a really exciting last couple weeks because of this resource update. They've only had 1 season at McMillan Pass, right? This is a brand new company. The deal didn't close until earlier this year. They did not even that large a drill program up there that managed to take the resource from 30 million tons to 50 million tons and keeping it at a grade of almost 10% zinc equivalent, and the zinc portion of that is very high. So that gives them the largest lead zinc deposit controlled by a junior in a hot market. So that in itself is a very significant thing. Next, they're gonna put a PEA on that asset. Why that matters is, yes, it's in Yukon and it's at the end, it's on a road. It's a very long road. So people have concerns about the location, but if the PEA can show that the deposit is economic, would make money as is, then when Fireweed goes back this summer to capture what I think is a fair bit of still low-hanging fruit, like I think they can grow this deposit by almost the same amount again next summer with not that much drilling, then all of those additional tons become bonus on a PEA that already makes sense. And this is all within a hot zinc market that needs assets that make sense, right? So then you take that in a company that has a very small share, very tight share structure, and where the valuation per pound of zinc in the ground is really low relative to its next peer. So that's Fireweed, interesting opportunity for sure. Integra Resources. The Delamar project has this interesting history of really high-grade historic underground, then this big open pit operation that ran for 20 years when gold was hardly worth anything. And they had to feed a huge mill, and so all they could do was search for more near-surface, low-grade stuff. But there was this high-grade below, and the search for that low-grade on surface kept sort of tagging into suggestions that there was more interesting stuff below, but they had to feed this really hungry mill, so they didn't follow it up. That's what Integra is going to follow up now. They already have a significant near-surface, low-grade resource, 2.7 million gold equivalent ounces at Delamar. They're going to go in there and start and look to see if there might also be an interesting high-grade resource that's right below it. And then there's Florida Mountain, which is literally right next door, like a few kilometers down the road. Florida Mountain has almost the same backstory in terms of low-grade open pit and high-grade underground. They're about to announce a resource at Florida Mountain just by using the historic data. When you're a company that's at the stage of Integra Resources, this sort of like advanced explorer looking at economics, the market cares about valuations on a sort of what your market value is per ounce in the ground. They're about to probably double their per ounce in the ground, gold equivalent ounce in the ground count when they just come out with this Florida Mountain number. So that's going to be a significant market event. And that's before they even start exploring to show whether the high grade exists below, which is, as George likes to describe it, sort of the nirvana, if there's both the open pit opportunity and the high grade at depth. Entree Resources. So we've moved into royalty plays. Entree is not exactly a royalty. They own 20% of parts of what will be the third largest copper mine in the world. It's very rare to get your teeth into an asset of that scale. They do. The technical report that they just put out captures the numbers for what they know is going to happen at Oyu Tolgoi. So they own 20% of Lift 1, which is part of the northern part of the mine. In a few years, development will get in there. A few years later, block caving will start. So cash flow for this company is going to start within 3 years. Really significant cash flow for them starts shortly after that. They don't have to pay anything to get to cash flow. Their partner has to provide them with a very low-cost loan to cover what's actually a very modest capital cost, about $50 million to get their part of this project into production. This is a low-risk annuity exposure to copper. So at the end of the day, it could just be that. It could be decades of royalty-type income into a small company from their exposure to this asset, decades. Or they could get taken out before that by a metals trading house or a royalty house that decides that they want that income for themselves, especially because it's been so de-risked. The other royalty company in play here is Mauryan Resources. Very different royalty because they have a royalty on a coal asset, seaborne metallurgical coal in Nova Scotia, being built by the Klein Group, who are famous for building big coal mines in the States. This asset is now in production. It is ramping up this year. The royalty component here conservatively will pay out $4 million a year to Mauryan. If we were to just use the mine plan as it is and assume that metallurgical coal prices aren't going anywhere, I think both of those are too conservative. I think the Klein Group is going to make this mine considerably bigger than is currently expected, and I think metallurgical coal prices are going to do better. Why this matters to shareholders is that Mauryan is returning the money to shareholders. They don't plan on buying assets. They don't plan on really doing anything else with the money. They plan on paying it back to you. They already announced their first dividend, so you would already get money now, dividend money from this royalty play. If the royalty grows even modestly from the conservative estimates right now, is 10 cents a year reasonable? Very reasonable. Is 20 cents a year possible? Yes, and this is a stock that costs 60 cents right now. So that's a royalty play on metallurgical coal. And, oh, I've only given myself 13 seconds for UEC. I'm going to run over. I almost did it. So the uranium company in the portfolio is Uranium Energy Corp. This is unhedged U.S. uranium that's ready to go into production as soon as the team decides that it's time to do that. It really matters. They have their own process plant. They have an array now of in situ recovery, permitted, ready-to-go assets that can feed that uranium process plant. They also have a little bit more diverse exposure in uranium from hard rock assets in both the States and in other parts of the world. But what matters here is this is a team that's taken the uranium bear market and been very active. They have permitted projects, they've gotten them ready for production, they've acquired new assets. They are really primed to take advantage of the uranium market. They're also very knowledgeable about and connected to the uranium market. And the US exposure here is quite strategic. There's been some really interesting things that are happening in the US uranium sector lately that suggest this bull market is coming closer. I'm sure Amir will talk about that when I let him have the microphone. But you're going to have to wait for that because he's fifth in line. So first, now that I've run through all of that and you are trying to remember anything that I said about the last 13 companies, I'd like to ask